All right, can you guys see that that's recording? All right, cool. So, as usual, I'm gonna give everyone like 4 more minutes to get in, and then we'll get started. How's everybody's day? Nice, Pima. Yay, Pima, I still got this here. Appreciate it, man. I'm good, man. Oh, Fernando, what's up, man? I have not seen 47 meters down. I don't need that kind of negativity in my life. Thank you very much. I paddle all the time. I don't need to be thinking about sharks. Corey. Oh gosh. Deep blue sea grave. Yeah, I mean they say it's a really peaceful death if you say it's a really peaceful death once the water infiltrates your lungs. But I mean I'm skeptical. Gosh, I'm so losing this game. This is my last hope over here. God damn it. Now what are you gonna do, bitch? Ooh, no, he's just gonna take it, asshole. Let's redo that move. It's a computer. Can I redo? Ah, suck. Suck on that nugget. Okay, let's do that again. Cheating. See, this is the do-over feature that like we wish we could do in the market. Anyway, oh gosh. Fine, dude. Taken. He's gonna take this, isn't he? Asshole. And now he's gonna take. What if I did that? And I get a queen! Oh, okay. Good night. Good night. Okay. See, only thinking about the gains and not thinking about the risk is what made me lose that game. All I saw was my queen, and I didn't even think about the fact that you just take it with the bishop. Okay. Trading is a lot like chess, and I kind of gonna go over that a little bit. Like in today when I talk about how you have to always be like 5 steps ahead. Right? You got to think 5 steps ahead. If you're always thinking right now, you're trading with your emotion on right in the right now, right? Like, well, what we always preach all the time about trading is that like, the people who have the edge are the people who are in control, the people who like pre-plan out the trades, right? Because now they're prepared, they're ready for any kind of risk to come their way. These people are the people that are in charge. They have the edge. If you're trading with no plan, like, I mean, good luck, right? That's kind of what I'm gonna do. All right, so what are we at? Are we at 05 yet? Almost. Give everybody 1 more minute. And see, everyone knows that I give everybody 5 minutes now, so maybe I should stop doing that because now everyone comes in the last minute like, oh, he doesn't start. He doesn't start until 05. All right. So we are there. All right, so today I'm going to be I was going to talk about the first resistance short today. I had a good one planned for today because we had a really good example on Yuma this week. But then like today came along and like I asked everyone if I wanted to change it to this topic, and everyone said sure, right? Aloha, buddy. Island time, it's 1:05. So today we're going to be talking about the stuff, and so it might be a little bit of review for some older traders, but there's still going to be some good stuff in here, and I'm going to kind of go in detail about what I like to look for in particular. So hopefully there's going to be some good value for even the more experienced traders who know about stuffs. And even if like you're new to it and you kind of got an idea, I'm hoping this is going to clear some stuff up. I have something special planned in the middle of the webinar, so you're going to have to. I'm gonna keep you guys hostage and not tell you what it is until we get there. And I'll be talking about the stuff at the end. All right. So without further ado, let's get started. Oops. Let's get started. All right, so we're going to be talking about every webinar for the off chances of their first one. I talk about the key traders of the week. I talk about market sentiment, what's been going on in the market, large caps, small caps, just kind of the overall feel. Mostly it's the small cap sentiment I care about because that's most of my trades, and I think most of the trades of the people in this room. Then I try to talk about like a lot of the kind of themes of the week where like sometimes just things pop up in chat or in after hours and things get talked about. Like most commonly, ask questions in the weekend mentoring, like stuff I get calls about. I like to bring them up in the trader topics segment. It's just an eclectic view of a wide variety of trading topics that we all kind of deal with and my takes on them. Then this week, because we're talking about this stuff, that's a strategy based topic. So we're gonna get in detail about the stuff strategy, and then we're gonna end the webinar with Q&A. And if at any time you guys want to ask a question, please feel free to ask in here. Like other members can answer the questions, right? I'm gonna go over all questions at the end of the webinar. And if it's pertaining to what's on the slides, I try to look over, I'll try to get to them, right? But like, feel free, you guys can feel free to just like, go to town on the questions in chat, just like have fun, whatever you guys want. And let's get started. So just some key traders that I took this week. Docu kind of gapped up like 25% or something. And it was like a large cap. That's actually a pretty big move for a large cap on a stuff. By the way, can you guys hear the AC in the background? I know I ask every week, but it seems louder today. Is it clear, or is there a background noise that you guys hear? It's good? Oh, this mic is good still. Okay. Yeah, so Docu was a stock that popped up 25%, I think, on good earnings. And 25% is a lot for a big cap. So anytime big caps kind of gap up that much, unless it's super significant news, I tend to be more on the kind of retracement, like maybe up a little too much overexcitement on the news mentality. And so basically this turned out to be a trend trade. So I think I should talk about this part first. I'm going to be going over this in greater depth in another webinar, one that's kind of more dedicated to large caps alone. But a little preview of that is when I trade large caps, there's a specific pattern or like approach that I really like to use on large caps. And basically, unless I'm trying to like trade a parabolic short or a washout, something like that at the very open, my typical strategy for trading large caps is I let the open flurry kind of happen, right? Where it's just mass hysteria at the open. This is where I feel like large caps kind of they normally make their biggest moves, right? Like all stocks, the most volatility is right at the open. But I try to let that opening flurry happen, and it's my kind of hypothesis that large caps trend a lot better than small caps do. So but they don't enter their trends until about the first hour, or like after the first 30 minutes of the first hour is when the trends start to form, right? So that's kind of my approach to large cap. So you'll see me kind of wait for that morning flurry to happen, and then all I'm looking to do is join trend, right? That I want to join trend and trail, right? So that's my approach to this kind of trade. So knowing that, you can see I kind of did exactly that. Like I let this stock open, I let the open happen, and then I saw that we kind of stuffed this pre-market level pretty harshly, made a lower high, and this lower low kind of puts it in my mind that, all right, maybe this doesn't have the guts to go. This looks like a downtrend forming, right? A stuff, a lower high, a lower low, a big tank. I'm looking to get short on the pops, right? So I tried to be really careful with this trade. Like this wasn't a big trade or anything like that for me. So I basically I put an order out. Very simple. I put a hard stop in right there at about like 56.85, whatever that level is. I remember it was just over. I put a stop right there, and I actually went and laid down in bed. Right? I actually went down and laid down in bed, had the stop order out there, but I put an alert at 56.60 just to let me know if, just so I can start paying attention. And it never even reached. So like I came back and I saw that it stopped, and I was like, great. So my original target on this trade was like 54. But I came back to my computer and we were right here at low a day, and then I kind of like you know, there's no excuse about it. I just kind of deviated a little bit. It's not the best. Like I just deviated from the trade. Like we were starting to get into the middle of the day, and I was just like, maybe it's not gonna roll over. Like, you know, like I originally had the crack thesis here, but with large caps, another mentality I like to have is for small caps. I have a habit of going for range break strategies. I like to the strategies I like are breaks of range. When I like to trade when ranges break. Where it's kind of like the opposite of Bao. Bao likes to trade when ranges hold, right? He will short resistance and like he will short a stock right at resistance and cover its support. I want to be buying the break of the resistance for the breakout or shorting the breakdown. That's just kind of my style. You know, I like to buy the breaks of. I like to trade range break strategies. And so, but with large caps, I tend to go more like Bao's way. I tend to be a lot more range hold strategies where I'm expecting the range to hold. So, like oftentimes I do like end up like initially like I'll have a break exit. Like I'm waiting for low a day to break the range and then cover underneath. That's something I'll do with small cap strategies. And I notice that like a lot of times when I do with large caps, they just hold. And I remember that and I'm like, you know what? This is a good trade. Like it's right here at low a day. Am I going to regret it more if it pops back up to 56 and I could have covered here, but I didn't? I ultimately decided, yes, I would have regretted it a lot more if I let it come back to 56, which I thought was a decent probability. So I just took the trade off there. And it doesn't really matter once I exit what it does after. I guess in this case, it kind of matters because I deviated, right? But it eventually did crack. But it cracked it and it went to like 54, like 18, I think. And I think my order was going to be at like 54.13. So I would have been pretty annoyed, but I probably would have moved it up. So that was that trade. Very simple, very classic. Anyone could have done it. And it kind of fits into the whole let the open flurry happen, then join trend kind of approach, which you'll see kind of on a lot of my large cap trades in the future. So the next one was LCI, and I have a video coming out on LCI that's going to go into this trade in more detail, but it's not out yet. So I showed this chart because this chart's the most important part of the trade. This chart, right? I took this screenshot today. The trade started when we were right here on this big day, and my trade happened on the red day. So you can see, you should be able to tell right away what I was going for if you kind of hide this part of the trade, right? The red day and the two greens in this last red, what I was looking for, right? This is very clearly a first red day setup, right? So this is a first red day short. And the only other one I think I have a video for on this is pin. So I'm glad I finally have another one. This one definitely didn't work out perfectly though. And so let's get into it. So this was the first red day short, and what happened immediately out of the gate is that this stock, I just had to check to make sure I was recording, is that this stock fell down immediately, right? So if you guys have, anyone who is in Philly knows this because I answered this question in Philly, but the first red day short for me has two different scenarios. There's scenario A where it gaps up, and then there's like scenario B where it gaps down, right? So the first red day is typically on stock. It's typically gapping up every single day and it's never been red, right? This stock, however, actually did go red a couple different times. So I was a little more conservative with this one, just knowing that this stock had gone red a couple different times. Like you can see the bottom wicks on these. I was more careful on this day, thinking that this could just be a wick and it could come back. So knowing that, I was more careful with LCI, just because LCI has also just been a pain in the ass for all short sellers in general. So I had that like, I had my finger on the cover button ready for the trade not to work coming into this trade. So it gaps down immediately. And so like I said, the scenario B is when it gaps down, right? Scenario A is when I'm looking for the stock. Now it's gapping up and I don't want to be a part of it until it makes a lower low, ideally kind of in conjunction with the prior close. So like if it gapped up to 1350, I want to see it slam down here to 1315 and then make a lower high and a lower low, and I'm slamming into that, right there is, I'd be slamming into that right there. But if it gaps down like this one, for all intents and purposes did. It opened right here, but it just tanked right at the end of the open. That's essentially a gap down for me. So I'm waiting for it to pop up, right? I'm waiting for the stock to pop up because I want to short risking this red to green. That's how I trade the scenario B part of a first red day short. So right here, I was actually getting kind of excited that we might get, my orders were up here. I had a little bit below 13, but I had most of it right up here, right? That's a classic short into the prior close on a gap down setup. But we stuffed epically, right? We stuffed epically. And so it's my, like, okay, maybe that's it, right? Maybe that's all she wrote. And if we're going to be a nice steady downtrend, staying under VWAP, staying under this lower high, I want to be a part of that trade. So we stuffed epically. I get short. We get a nice tank. I had a cover right down here. Like, I'm not so mad because it was at like 12, 13. So I missed it by like 10 cents. So if it would have been 2 cents, I would have been really mad. But I wasn't so mad. But I had a cover right around here. Didn't get it. It pops up. And you notice I don't add it initially right here. And this is because LCI is that pain in the butt stock, right? This is that pain in the butt stock. So I wait for it to kind of reject a couple times before I add to my short here. And I add to this short here because I'm willing to now risk this level instead of this level. If we get back over here, I know like I don't want to be a part of this anymore. So I give it time to consolidate, and this is just not working, right? This is not working, and so I exit as it starts to perk through because it's clearly not behaving, right? There's a time stop I kind of attached to this kind of trade, and when we're making a lower high here, this should be rolling over here, but we keep finding support here at 1250. It's the level we tried to break down here. We reclaimed it. I'm not feeling it. It's taking too long. It's holding 1250. I'm out. Like, it's not being easy. I don't need to be a part. If this stops, I can get back in, right? I can get back into that trade if it stops right here. But like, I don't want to be a part of it knowing that it's LCI and it can be a pain. So I was early, essentially, right? I was early. My target was 1150s, but I was a little bit early. I cut it. No problem, right? And then so it does its thing, and I feel really good because I've eliminated this risk. Like, I time stopped out. I eliminated the risk. And if you look in hindsight, this is essentially just perking in the prior close, right? But I'm still okay with not putting shorts on here. One, because it's an annoying LCI stock, and this is more looking like a bottom wick that's going to now reclaim because it's happening grindy, in a grindy like fashion. Had this, had this happen, had the stock reached 13 on this parabolic spike, I would have been much more excited to short that. But here, I'm just in total avoid mode, right? So we get back here when it rejected and it got weak again. We got back under this 1250 line, which is where it was holding before. That's when I put the trade right back on, and I start to enter cover mode. But this time, I move my profit target from 1150 to 12 wash because, over here we were starting from down here, right? And I'm thinking 1150 is decent range. When the move down is starting from up here from 13 with no bounce, and I'm entering here, I kind of I'm moving my target up a little bit because, it's hard to expect this to go from 13 to 1150 without a significant bounce. So I did move the target up a little bit. I moved the target up based on the chart changing a little bit. All right, so that was LCI. Yuma was another good one, and this is the trade I wanted to do the first resistance short on based on the fact that this was the first resistance short. That in a way, like there's two kind of first resistances, right? There was two times you could have made this trade, and I'll go over this in the next one. But there was basically two times. One didn't work, but one did. Right? I'll go over that in another, maybe next week when I do first resistance. I'll use this as an example, even if there's a better one. So anyway, so this was just the first bounce long, right? And I picked a really zoomed out picture because the zoomed in picture is in chat, and I guess I don't want to just show the zoomed in picture. Maybe you'll think I traded it later and didn't show it. I don't know. There are trolls out there. But anyway, this was all I did today. Like, I think this shows that all you need is one good trade on the day to make your day, right? All you need is one trade, and you don't have to involve yourself in any part of the trade at all. You only have to get in when you see your edge, right? And there was clear edge over here on the breakdown, but this is a great example of an epic overextended trend break setup, but I didn't have the borrow. Joe did, and he nailed it, and good for Joe, right? But anyway, so my trade on this was the first bounce long, and so this, as I talked about before, like I'm not actually the best first bouncer. Harry is a much better first bouncer than I am. Like I consider the first bounce to be a continuation long. The first bounce is an example of a continuation long. I'm not very good at, like, I'm a longer, but continuation longs are not my specialty, right? And the first bounce is essentially a continuation, right? The first criteria for the first bounce is a big move up, a straight move up, and what you're looking for is to bounce it. You think, because the assumption is that there will not be, Cody did a good example of capturing this note, like big, strong moves to the upside are very rarely matched in an equal parallel move to the downside, like an equal, like, verbatim move, like all the way back down to 325. That typically doesn't happen. There's typically a bounce somewhere, which is the idea of the first bounce. So like where should I pick it, right? There was a couple of different places you could have FOMO'd entry. This might have been a good washout entry, but I don't think it was a good first bounce, right? Just because it's still really extended from this move from like 275. I try to go for the 50% retracement combined with the hole and half number, right? So I do bounce this. I try to scale in at around 4 because I think we're starting to get extended to the downside. My risk was 75 on the trade, and I had one more ad down there that I just missed in the low 80s. I just missed it. I think Harry got the exact bottom. Like he got like 86 or 87 or something like that. He got the exact bottom. But my risk was 75. It was a washout entry. So what does that mean for anyone who's paid attention to my style of trading, right? If I'm buying into a washout, there's no reason for me to hang on more than the immediate rip back up, right? If a washout entry, I need a rebound exit. It's the longs version of front side short, front side cover. So like I get in on the fronts on the extended washout area, and I'm getting out immediately on the rebound. I get out most of my sides up here, and that's in chat. Like I tried to leave some on for what if, but I took the what if off it, like when it looked like I was gonna, like when it looked like it failed, right? Broke VWAP, consolidated a little bit. It's not really zoomed in there, but consolidated a little bit and came back down. I was like, it's a what if, I'm gonna take it off. And of course it was the exact bottom. I considered a new trade. I considered a new continuation trade when we ripped back over, but like I said, I suck at continuation trades. It's not my forte. I don't regret at all not being in for this. Like, I know, like, I'm not very good at buying up here at 425. You know what I mean? I'm not good at that, right? Like, one thing that also kind of kept me a little cautious is I don't normally like to do first bounces. This was kind of a rare exception just because there was a lot of volume. It was a very low float, and I felt there was a trap under VWAP. But most of the time, I don't like to be buying washouts that are under VWAP. So when we kind of, stuffed right here and stopped, I wasn't interested in buying this for the rebound. So it surprised me definitely. And I'm not good at buying back up here, right? And then like risking this low, that's not something I'm good at. Like the only thing I could have justified would have been buying up here at 440. But now look at my risk all the way down here to 390. No, thank you. Like I couldn't get in here, and I knew I couldn't. I didn't want to get in here, and I knew I couldn't get in here, so I just let it go. I took the predictable part of the move that I saw as the most predictable. So yeah, so I kept what I was good at. I'm good at washout longs and reclaims. Those are my claims to fame to longs, right? And scalping. I'm okay with channel scalping longs too, but when it comes to continuation longs, I seem to suck. Maybe I should give it another try, but I no regrets here. So was there a level there? There was $4, whole and half dollar levels that I try to care about. Because it was super low flow and a lot of volume, it was kind of a rare exception where I was okay buying under VWAP a little bit, but like there was a little niche here that you could, but mainly the idea was a 4 wash. A 4 wash was the main level. Yeah. So that was that trade. Oh, and so the market sentiment. I was really surprised this week actually when I did this. Anyone who's been here any time at all, like any people who are here week to week, this is always red. This is always red, like mostly red and a couple greens, like keeping the momentum up. we had a lot of good, like strong stocks that just didn't give it up this week. Tough week to be a short seller if you weren't picky, right? Like, I mean, Roku Roku had like 1 or 2 red days and then steamrolled everybody in the last couple sessions. LCI is just holding up strong. ARDX is just grinding, right? ACAD had a strong gap and held it. MNK, ENDP just slow grinders up. Fran went absolutely berserk. TTOO just continued its charge, right? Fran and TTOO definitely leading the small cap momentum, keeping us in that buyer's market, basically. And I'm really grateful because not just because I like to long, but I think that the best opportunities come for shorts too in a bull market. You just have to be picky with it. So market's super optimistic about trade negotiations being open and trade tariffs being delays. Spies at all-time highs. That's always good for I think the market as a whole. Yuma had its massive tank, right? Yuma had this massive tank. I think that kind of, like that tug of war the other way. NSPR, SINT stuff today. Tops just, I don't know, what did it offer? It's Tops, probably. I forget. Some kind of bad news, but like that's Tops, always bad news. Blacks are kind of neutral. That's why I'm put them as black. And basically my market participant column over here, it's not necessarily if the stock stays green, it's green. If the stock stays red, it's red. Because with small caps, I judge sentiment based on what I think the market expects stocks to do. Everybody expects small caps to pump and dump, right? So just because small caps are pumping and dumping, I might not necessarily give it a red ticker. I might give it a black ticker, like MBOT. It popped up and came down, but it didn't like offer or give it or super slam down like Yuma did, right? Yuma super slammed down, whereas MBOT just went up, came down. I think that's kind of expected for stocks. So if it meets expectations, that's kind of like a neutral. If it breaks expectations, like Fran, I consider that to be bullish. And if it breaks the downside expectation, like offers like Tops did, or just totally collapses like Yuma, then I give it a negative sentiment, for those wondering. So that's kind of how I judge sentiment on a day-to-day basis, not just in the webinars, but that's how I judge it, right? It's count all the surprises in the week and how many good surprises were there and how many bad surprises were there. And that's how I judge sentiment. That's how I make up these lists. Not much negatives, just everything's pretty much positive. I was really surprised. And I almost recommend that everybody kind of do this on a week-to-week basis. It just gives you a little bit, it helps me. It kind of gives me like, where are we in the market? What can I expect the next day or the next week? All right, so the Yuma slammed, a couple of big gap downs, TNAB and Tops, and reverse splits are still not acting up like they used to. So hoping that changes in the near future. And all right, so I still think we're here. We were here last week, and I hope we stay here next week. We haven't entered this tankers market here, I don't think, most of the stocks are still green, still strong, and I hope we stay there. For those if this is their first webinar, this is the pattern that small caps, I feel, tend to follow. We enter a buyer's market where everyone buys everything, and then everyone eventually just gets stuffed on, and then nobody buys anything anymore, and everything dies. And then everyone's sick of everything dying, and nobody buys anything anymore. And then we enter a dead market. If no one's buying anything, if PRs are coming out and just stocks aren't popping up, we're in a dead market. And the decrepit market is when we're in a dead market and it's summer. So a trader topic for the week, and I kind of made another webinar about this in the past, but knowing your limits is a big part of trading, right? And the most important limit, I think, the most pertinent in every trader's everyday trading life is their patience level. So I talked a little bit about this before, but if this is your first webinar, hoping it's helpful. At the end of the day, your P&L is the only thing that matters, right? And as much as we say, don't look at the P&L, right? Like, you're still gonna look. And at the end of the day, you're still gonna judge. And as much as I will preach, don't try to like judge yourself based on one day, right? If you have a bad day in the market, you're gonna be feeling lousy. And it's part of the trading process is like evolving past this, right? You kind of have to train yourself to be like a little bit uncaring, and try to come into every day fresh, right? But at the end of the day, your P&L is what matters. And so the goal of a process is to ultimately help your P&L. And the way it does that is trying to eliminate intraday decision making, right? But sometimes you're forced to make a decision in the moment. And if you are forced to make a decision in the moment, this is where I think knowing your limits, especially your patience level, comes in great benefit to your P&L. And this is what I'm talking about. You don't want to ruin your P&L if you can predict that it will be ruined ahead of time, right? Everything that, like, the theme of this webinar is going to be planning and ahead of time, right? If you can, like, so let's, knowing your patience level, if you know, like, I'm trying to think of an example in my previous charts, but if, like, for example, like in the DocuTrade, let's say, like, my patient wasn't out, but it was close to being out, right? Like, it could have been out. I wouldn't have liked it if it went to 16. So in my DocuTrade, I knew that the stock was at low a day. And let's say that my patient was completely out, right? I knew my patient was out. When your patience level, when you run out of patience, when your patience level is on empty, you know, if your gauge is at empty, what that means is you are now going to exit at the point of max pain or at the next unfavorable move in the opposite direction of your bias. So what it means is when your patience level is depleted, like 100%, you are going to be covering on the perk. I promise. So now the game you're playing is no longer I'm being patient for my target. The game has now, when your patience level is out, the game has now switched into a new game. And the game you're playing is, I am now gambling that the stock is going to be nice. I am now gambling and hoping that the stock is not going to perk. So if I'm holding my position for lower and I'm lying to myself and I'm saying I'm doing it because I'm not covering because my target is lower, you can only do that if your patience has not run out. So being aware of your patience level is going to help your P&L in a lot of situations. So it's always good to identify, like, you never want to be reaching for too far, right? So let's say that you tried to make a goal on this trade. Your goal was to improve your patience. Now that's different. If your goal was to improve your patience, now that's something that you planned ahead of time. Now you're ready to suffer this uncomfortability of holding through the perk, but you should be prepared for that ahead of time. When you're forced to make this decision is when you didn't prepare ahead of time to increase your patience. You should never ever try to increase your patience. That's never a decision you should make in the moment. That needs to be a decision you make outside of the trading day, outside of the moment. Because in the moment, when your P&L is depending on your decision, you don't want to be making a decision, but if your patience is run out, you have to make a decision. And the decision you should always kind of make is the decision that helps your P&L, right? And you can predict ahead of time. If you know that you're going to cover when Docu pops up to 56, that's a pretty reasonable possibility. It's at lower days, like, and it just fell really hard. A bounce is reasonable, right? It may be unreasonable to think that it's going to be easy. Like, I always think it's unreasonable to think stocks are going to behave perfectly nicely. Oh, no perk up, right? It's just going to fade off nice and easy, like, you know, a unicorn stock. You know, like, if you can reasonably predict that it's going to pop and you know you're going to cover on the pop, you might as well cover right then and there because it's going to help your P&L in more times than not. And so this is making a smart decision. The decision, it's a controlled decision, right? It's a decision you're making when you're in control. And the only way to be in control is to know your limits, right? So, oh man, total spelling error, improve. But this doesn't mean that you should just abandon trying to improve. You really should try to improve. But the only time that you should be trying to improve is 1, when it's planned, 2, ahead of time. And when you do these things, it means that you're trying to improve when you're in control. And you're in control because you know your limits, right? So very important limit to know about yourself. So you know what I mean? So when you're in a trade, always assess where you're at mentally because your mental state of mind is important. And sometimes even asking yourself, is my patience run out? maybe just being aware of that is going to help your patients. It may even add to your patients. I don't know what you are. Maybe not. That's kind of a personal thing. So I know it helps me. Sometimes when I rationally think about it, how's my patience level? I'm like, don't be a wuss, be patient. But at least I'm thinking about it. And when I think about it, it makes me feel like I'm more in control. Doesn't this somewhat conflict with the outsmarting the market concept? Yes, it does. But the difference is one's planned ahead of time, right? When you try to outsmart the market and say, yes, very good point. Outsmarting the market is a concept that I talk about when you try to deviate from your plan and say, oh, I know the stock is going to pop. I know the stock is going to pop, so I'm just going to cover before it pops up. Like, let's say a resistance level is at $5 and your risk is $5, but you're afraid that if it breaks $5, it's going to really break $5, and you're like, I can't take that risk, right? Now what you're doing is you're preemptively not trusting your resistance level, right? That's different, right? When you're not trusting your resistance level, when you're not trusting your stop, you're outsmarting the market. But what this is kind of doing is you're not letting yourself outsmart you're not trying to outsmart yourself. You're not trying to say that you're more patient than you actually are. So when you're trying to outsmart the market is when you're in control of yourself, when you're in control and you know what your patience level is, but you still decide to cover because you don't want to take the loss. See, that's the difference, right? Outsmarting the market, you're normally in control and you do have patience, but you decide that you just don't want to lose money, right? That's outsmarting the market. It's a good, can you see the distinction, or should I try to say it better? That was a good one. That was a good, really good question. Yeah, the difference is it's like you're trying to outsmart the unreasonable part of yourself. Like if you have a target on the stock that my memory sucks. What was it? Yeah, LCI. If I have a target of $10 on LCI, right, when it's trading at like $12.50, I know that it might actually get there, but who am I kidding? Who am I kidding, right? Now, that's me not knowing my limit. If I am breaking the knowing your limit rule, then I'm being unreasonable, and knowing my limit is going to protect myself from my own unreasonableness, right? I'm not, that means I don't know my limit, because there's no way I could have held that to 10. But if I had a 10 target and it's slowly going down and it's an hour later and it hasn't reached 10 and my patience has run out, I know that I'm being unreasonable looking for 10, and that's me not knowing my own limit. So you kind of need to outsmart yourself and figure out your own limit first. And then if you decide that you can hold, but then you choose not to because you're like, oh, it's totally going to break. Not if it breaks, I know I'm going to cover, but I know it's totally going to break. That's the key difference, right? If it breaks, I know I'm going to cover is knowing your limit. But saying, being in control and saying, oh, it's totally going to break, I'm changing my mind, that's outsmarting the market. Good question. Another limit is, I can't believe I put this on here. I was debating that so heavily, putting that on there. Knowing your size limit is another limit that's very important to trading, right? So, and this is so obvious. I'm going to go over this really fast, but knowing your size limit, why does trading too big lead to inconsistent results? I just wanted to reiterate, it's because you're not in control, right? And basically you're making forced decisions, right? So kind of piggybacking on what I talked about last week, and 2 times has really, Alex has really kind of embraced it, and it's working for him, so I'm really stoked on that. Is that trading below your means a little bit is the easiest way to be in control, right? That's the easiest way to be in control, being aware of your limits. Your limits are probably stronger, by the way, when you're in control. That's what it is for me. And it's the easiest way to make better trades, right? And the key secret with trading below your means, is that you will scale. People who are trading up here at the brink of their limit are trying to scale up like this. if you're down here trading below your means, you're gonna scale up at the same speed, but you're just starting like you're just giving yourself you're giving them a head start, but you're gonna catch up, right? You're going to catch up. Like you're just starting from further back. You know, you're gonna still scale up. That if your means is 500 shares and you're trading 200 shares, eventually, like you're gonna go from 500 to 600 to 700 to 800. Well, you're gonna go from 200 to 300 to 400 to 500. Eventually, you're gonna get there, and now you're gonna be trading 500 shares. But the thing is, you just didn't start there. And if you started 500 shares and you're like this, you know, trying to scale up, it's gonna be a lot smoother. You're gonna go straight up to 500, and you're gonna be at 500, but you're not gonna go through that chop in your P&L because you're in control of your trades, right? So the catch-up period, trading below your means, you're going to catch up to your previous, you know, at the brink mean size, but now that's going to be your comfortable size. So if you always trade comfortably and scale up slowly, eventually you're going to get to where you were trying to trade when it was at the brink of your limit, but now it's going to be comfortable, right? So the catch-up period is temporary, but why does nobody do this? The reason why nobody does this is literally because they're impatient and greedy. This is the only reason why people don't do this. They don't want to start from back here. They don't want, it's going to take longer. I want to be making more money, more now, right? But if you have the patience to just take a step back, go slower than everybody else, it's kind of like the turtle and the hare. You're going to get there faster. Like, you're going to get there smoother and faster. The catch-up period is temporary, right? Now, the thing that you have to do when you're trading below your means, and this is why Bao will always say it's a constant fight, right? You have to watch out for the urge to jump. Because when you're trading below your means and you're making green trades and you're being consistent and you're comfortable, what's gonna pressure you the most? Well, I'm doing so good. Why don't I just size up? Like, if I can do it on 500 shares, I can do it on 1,000, right? But what are you doing? You're basically just breaking the thesis, right? You're breaking what's working. It's working because you're comfortable, and now you're saying, well, I'm so comfortable, why don't I just trade uncomfortable? So that urge, the urge to jump, that's a permanent fight, right? So the catch-up period is temporary. If you just scale back and trade below your means, you will catch up and you'll be trading the size, but the urge to jump up is always going to be permanent, like forever. I don't even expect that I'm going to get rid of this fight, or Bao's ever going to get rid of this fight. The urge to always size up to your means is always going to be there. But that doesn't mean that you have to get to a certain level and plateau. You just have to trade below your means and keep sizing up. Why not? Keep sizing up, but keep sizing up on this line, not on this line, right? Never make the jump up here. Never make the jump. Stay down here, and eventually you're over here already, and you can keep climbing. Yes, that means when you're up here, your means are up here, but you never make the jump. You know what I'm saying? If that makes sense. You want to always trade at the lower end because that's where you're in control. Don't ever make the jump. The second you make the jump is when you're out of control. So anyway, so that was, I said that'd be quick, but I got a little excited there. It's a secret, trading secrets here. Like, this is all it is. Like, don't jump. What's that show? Please Jump. Please Jump. Like, it's oh, that was the Miley Cyrus movie. Yeah, that was like when Miley's like, please jump. Yeah, Jen, I didn't say that. Anyway, so the stuff move, right? Okay, so first, brain fart there. I was trying to read the chat. Like Bao said, start with 100 shares. Yeah, you'll eventually get to 500 shares. You'll get there. But if you start at 500 shares and try to make yourself to 1,000, that's a rocky road, right? That is a rocky road. But like, I mean, if you just start at 100, you're going to get to 500 in no time. And then eventually you'll get to 1,000 too. And what's the problem with just being below your means if you're still climbing? Yeah, so this was my sync trade today, and this is a stuff, basically. So first of all, for new people in the room, what is a stuff? right? For new traders who are maybe vague on the concept, what is a stuff? A stuff is an accelerated move to the upside on increased volume met with a massive rejection and then normally followed by a harsh slam down of the stock, proving that there was a wall of sellers, right? Sometimes it's just one dude. A lot of times it's just one dude or like one, maybe it's H.C. Wainwright putting out a block up there, right? Like, or maybe it's a whole bunch of people all at once, right? Like it just proves that there was way too much supply right there, basically. And so oftentimes these are orchestrated, meaning like somebody pushed it up there, somebody bought it up, somebody held it up while they sold their longs, and then they slammed short, and then they crashed it, right? They pulled the bids, sold their longs, and now it's no bids, right? Looks like that's what happened today. Right? But the moves can be organic, right? The moves can just be stocks are sometimes curious, right? Sometimes they want to test up that resistance level. Buyers do want to go and buy for the breakout and like they want to see if it's going to break on the breakout. And if there's enough interest in that happening, sometimes it's organic and true buyers just want to test, but then natural selling pressure comes. And that can also be a stuff, right? Where everyone's riding on maybe this is the breakout, it pops up over the level, and then it stuffs down because there's too much supply. It can be organic, but a lot of times in small cap moves, it's totally orchestrated. So the key question is, how do you know if something is going to stuff, right? Like the answer is you don't, right? You really don't. It's a comfortability thing. Just because you don't know doesn't mean that it can't be on watch for like this is the possible stuff candidate, right? This is the possible stuff candidate. So the things that make stocks possible stuff candidates are dilution, shitty names, but I mean, and normally those go together, but like there could be current dilution, but maybe not current. Normally if it's current dilution, there's stuff in play, highly more likely. Shitty names, often stuff like a formerly, maybe there's no dilution, but it's just a shitty name. Like let's say Tops doesn't have any dilution, which would be a miracle. But let's say it didn't have any. Just because it's Tops, a stock like Tops can just stuff just because it can just an organic, everyone piles in because no one has any faith that it's going to stuff. All right, so dilutions, shitty names, stuff's always just, they love to happen at obvious stop loss levels. That's the big one. And so this is why, like, when I talk about the domino effect, the domino effect is normally when there's like a level here, a level here, and a level here, and like a level here, and one stop triggers the next one. A lot of times, like I'll be more squeamish to buy a stock when all of the levels are at the same place. Now there's no domino effect. All the stops get triggered at once, and that's often like where big players with a lot of money can come and slam down with liquidity. They're looking for that. They're looking for all of the liquidity to come in at once because they need the liquidity to fill their big position sizes. So that's why sometimes when all of the levels are like always at the same level, like it pops up 5, 5, 5, 5, 5. I'm typically not going to be buying that break. That's just like kind of a general rule of thumb that I have. Unnatural acceleration, like the stock's just consolidating and all of a sudden it's like go, right? Like that's an unnatural acceleration. Sometimes this is caused by chat rooms, right? A lot of times this is caused by chat rooms. But sometimes it's the orchestration from like whoever's playing the agenda, right? A lot of times it's unnatural. Just why did a big bidder just come in and then all of a sudden like the bids are now stacking up higher like out of nowhere, right? Like this is like unnatural acceleration, often a key indicator of a stuff, right? Extension is always a good thing when it's like an extended move without a pullback, right? That's often a good thing. But the pattern I really look for is consolidation, like an extended move, and it's consolidating at the top. It's consolidation, and then it makes a perk, it stalls, and it stops. It's typically the 1, 2, 3 that I look for, right? So that's basically what a stuff is. So this is going to be, I guess, the trick here.
Hey traders, this is Pete Bradley 90.
I recorded my SINT trade today, so we're gonna watch it. Let's see. All these are chess videos. I'm just getting back into chess. All right. So is that good enough? That's good enough for everybody to see. Let's go. Let me know. Is there an echo?
For the My Investing Club chat, one of the top mentors and moderators in chat.
It's not annoying. It's good. Okay.
Special gift to our viewers on YouTube. We have created a free 2-hour course to help teach you how to start a consistently profitable trading business and identify high-paying setups in just 30 days. There will be limited seating every week, so register for the course and reserve your spot now using the link in the description. As a special bonus, for everyone that watches the entire video, we will give you the link to a free 10-hour additional mini course that has never been released to the public. Register now before all slots completely fill up. All right, guys, now this is a live trading example from earlier today where Austin nailed, particularly today, on ticker symbol SIN. Chat, join My Investing Club.
Okay.
If you want to see more of these live of our exclusive content.
All right. So I start, maybe I should full screen it. You guys want it full screen? I started the video, okay, because I started the video right as I put the trade on, because I'm like, this one could be good. Let me give it a shot.
Hey, Gunnar.
Okay. Yeah, so I just put on a starter right there. There it is. That's clear. I just put on a starter right there. I'm just kind of letting it go, letting it do its thing a little bit. I want to see if it's going to get back up to 3. And I already have a cover out because I'm expecting, like, I think this has stuff potential for sure. All right, so I just add right there because I like the fail. Now this is curious. I'm like, wow, okay. Like, this is setting up to, like, it looks like it's potentially trapping. So I'm being cautious, watching. But I do like that it keeps, you know, stuffing like that. I really like that. All right, we're pushing. At this point, I'm probably not going to add over 3 unless it starts to stuff over 3. I'm kind of waiting. All right, so I see it stuffing, and I think I put a cover here pretty soon. And look, I know, I see I'm 70. I'm trying to figure out where to cover based on where the low is. All right, so I'm trying to get right above the low. This is only like a 9-minute video, so no worries. Yeah, it's just kind of stalling out here, and I'm just trying to be patient. I'm hoping I get this cover. And I think I get rid of the order and I move it like a cent up. I just moved it a cent up because I'm like, I had a feeling it was going to be hard to get the fill. Because it's just bouncing and recovering, bouncing and recovering. So I'm moving up a little bit. Or tanking, recovering, sorry.
Got fill size in.
And it's really tough to fill right here. It's just taking size on the bid. That was a strong first up, dude.
Are you sure?
Yeah. But I mean, I covered some down there, but like, Jesus Christ, like, what the fuck was that? What the fuck was that? Yeah, I think I got half off there. And at this point, I'm thinking 3. This is looking like a stuff candidate for sure. So I put a couple orders out. I want one before 3 and one after 3, because I think it's gonna pop over 3 for the stop losses. But just in case it doesn't get there, I feel the stuff coming. So I put an order before 3 at like 99, and then I put some at like 305 or 304. It's just like it feels like it's extended, it's consolidating. Like now next I'm thinking the perk is coming, and then hopefully this stuff, right? And this is a really nice trade because it's really close to high a day. It's a really easy stop out if it just keeps charging. So it's like, it's a good risk to reward. Why not put it on there, right? Like, I mean, what am I going to lose with that ad right there? I already have good risk reward shorting in the, here it is.
Got fill size in.
Yeah, so I get the fill, and now I'm in love with the fact that it didn't just break high a day. I'm in love with the fact that it didn't just break high a day. And so I think I start trying to put my covers in here because I know it's coming. Yeah, there's one. I move it up.
Got fill size in. Got fill size in.
Get the old one. It washes.
Got fill size in.
And I hotkey out.
Got fill size in.
Yeah. I knew that shit.
Hey, trader Tosh, I go by T Bradley Knight in my investing club chat.
Yeah, so that was no, I wasn't listening to a chat room. No, I didn't know, like, I honestly didn't know the chat room was in. Like, was the chat room in? I had no idea. I'm just like, that's an unnatural acceleration. That was the move. So yeah, so that was the stuff trade on camera. It's funny, like I talked to Alex about doing live trades, and I was like, you know what? Like, I don't know if I can. Like my video software is really high def, and I don't know. So it was like a 9-minute one, and I was like quick to get out on the video, but like I just had a feeling. I had a good feeling about SINT. It reminded me of what we talked about last webinar, right? Last webinar when Joe and I were hunting, right? Joe and I were kind of hunting for that stuff trade, right? And I was like, I don't know, like who was here last week that remembers us talking about that, right? I was like the Glory Day from the Glory Day stuff trade, right? And he showed me the last time it was on UUU, but I was like, No, that's more of a like like a larger time frame one. The one I'm talking about is like on the 1 minute chart, right? The 1 minute stuff chart, right? So that's like that was my bread and butter in like 2015, 16, 17. The background voice. I mean, I was talking. I was like I was talking in as it happened. In the video. Yeah, it just sounded weird because I actually didn't have my microphone on. The background voice, the got filled guy. Yeah, that's a DAS. Sorry, DAS offers that. It's in DAS where it'll let you know if you got filled, right? Like the got filled on sync, right? That's DAS. So anyway, so here are some more stuff examples, right? So this is an example of kind of the one. This is more of an organic stuff, right? I'm gonna call this one kind of an organic stuff. IB has that in a British voice. So this is more of an organic stuff, like this pop over this obvious stop loss level on elevated volume and then a stall and a rejection, right? Elevated volume, stall, reject, right? This is more of an organic one. I think the ones that take longer to form are more organic. The faster ones definitely seem more orchestrated. So this is like, you can see like it pops up, puts this level in higher low, and these higher lows almost kind of show that maybe it's organic, right? This almost proves that longs maybe want to attempt buying over here for a move higher. But then it stops, it proves that there's too much selling pressure, and then all the longs fail, right? So this is an example of, I think, in organic stuff. This one definitely seems like an orchestrated stuff. Can you guys see it? Right? The stuff is right here. And it's in one candle, right? Just like this is literally just the one that I nailed, right? Like right here. Oh, nailed as usual, right? Just kidding. This is an example of basically what I just traded, right? It extension, consolidates, then pushes up on high volume, unnatural acceleration, stuffs, rejects, and slams, right? This is the stuff move. I think I remember trading this one. I traded this one. I shorted here, but I think I was like out over here. I didn't make it down here. I was out. I was definitely out over here. This isn't like, I think, an orchestrated example, right? Push up, like consolidate, perk, stall, stuff. You can't see the stall because it's on a 1 minute candle, but it definitely stalls up there. Dries, like, hope this one looks familiar, right? Dries. Okay, extended move, consolidation, perk up, and stuff. And for everyone noticing, I remember this one to the T. This was a day 2 move. This prior day started up from up over here. I remember this was a day 2 move, right? Or like it actually, like it might actually, it reclaims day 1, tanks day 2, but this is definitely a day 2 move. This stock perks up, consolidate, gives one last push, just obliterates everybody's patience. Once everyone's patience is gone, obliterates up here. And this definitely seemed orchestrated, right? Pops up here. Now see, this could have done it if it stuffed 640 too. That's the thing about stuffs, is you don't necessarily know where the ultimate top's gonna be on the stuff. But didn't another stock do this the other day too? I don't have that recent example, but it just happened the other day. Where it was just so fast. Can anyone think of the ticker? It just happened a couple days ago. I think Furu got in and perked it up, and it was like, I remember I shorted it, but it was too fast. I can look at my last webinar, but it was too fast for me to even get the ad because I wasn't prepared for it. I talked about it in last webinar. Yeah, maybe it was CTRM. No, maybe it was. It was one. Yeah, you're right. Oh, like it was CTRM where it totally popped up over 5 and just like it was just too fast, right? That was an orchestrated move. Somebody took advantage of that volume and just slammed it, right? So this is an example, 1 minute candle boom. This is another example right here. This was, I think, in 2018. Stock popped up, consolidated, and then it blows through right over 5, blows through everybody's stop on unnatural acceleration, high volume, and just slams, right? This is like literally, this was the bread and butter a few years ago. the fact that we just saw one yesterday and CTRM, maybe like I'm getting excited. Maybe I won't be the longer in the room anymore. I'll go back to the dirty deeds of short selling more often if this shit keeps happening. Are stuff moves more common at whole and half dollars? Yeah, they definitely happen more often at obvious stop loss levels, which coincide with whole and half dollars. I definitely think so. All right, so this is another example. It's pretty clear cut, kind of what we just did. What's another one? MCUR. This is an example. This one this one is definitely orchestrated, right? This one is, yeah, that was too fast to get. This one is definitely orchestrated, right? That one is definitely orchestrated. This one, it's kind of, you could go either way, right? Like you can see this push on high volume, unnatural acceleration, like right up here. The fact that it's really from the lows makes me feel like it's gonna stuff. And this is the exact reason why I didn't buy Fran the other day. I'll pull up Fran. Actually, I mean, I could do that. I can do that now. So like people were asking me on, let's see. What's going on here? Why can't I change that? Why can't I change this? Why can't I change that? I must be typing somewhere else. I must be typing somewhere else. I don't know. Anyway, we'll go over it. But Fran did this kind of thing where it off the low, it just perked up. If someone wants to pull up the chart for me, that would be great. Fran did this where it popped up out of nowhere. And like, I don't like to buy that. If it goes up unnaturally, I don't like to be the one buying that. And Fran kind of did that the other day on its day one or day two move, where it just popped up like huge and probably trapped a whole bunch of longs. But like, if it goes up unnaturally on like super fast, you wouldn't think it bounced off the low that fast. It would be more slow like that. This is the unnatural acceleration that just screams stuff, right? Pops up over this 225 level and then just slams down. Stops everybody out. Anybody who just got comfortable is now using 225, pops it over and slams. This is an example, probably orchestrated. Oh God, not that. Not a chart that I can't see. Let's see. Yeah, right there, this move. That's really hard to be buying, right? That's really hard to be buying. Just like this one. This is a really hard move to be buying. So anyway, the unnatural acceleration. This now, as I said, it could be like orchestrated or not orchestrated. Now that I talk about it, this is definitely looks more orchestrated than not. What's another one? Oh, this one's kind of small, tops, but it's right here. You see this? Where, you know, like we stuff down and like this one doesn't have the extension factor, but we're consolidating and it makes this unnatural move of acceleration up here. I should have maybe zoomed in. I don't have a zoomed in one of this one where I would have showed it. But then it slams down and it's this perk up through VWAP through that top right there. What is it? 450. Yeah, through 450 and then slams down, right? And this is, again, dilution, shitty name. What is this other one? I don't have the ticker on this one, but let's just find it. It's right here, right? It's right there, right? Right over. And you see, when I'm finding these stuff, I'm not even looking at the after effects of the chart. Where I'm looking at is the level where it breaks over, right here, right? I'm not even looking at this part. I was looking right here. This is the part where I'm looking at where can it like flood on volume. Oh, I don't even have the volume up there, but I'm sure it was a perk up in volume. And then it slams down. It's like an obvious stop level. Normally a dilute shitty name. There's a consolidation, a perk up on unnatural speed, and then it slams down, right? So that was my webinar on the stuff. Now I have to figure out why Fran's not going. Why I'm not being able to pull up a chart here. I don't know. It must have me somewhere else. Let me try to Let me try to put up another chart. Oh shit. There it is. Try to put up another chart. Yeah. I don't know. See, it's not letting me change that. Huh. I don't know what's going on there. Anyway, Q&A time. Never happened before. Let's try this again. No, it's not doing it. I have no idea why. Maybe my DAS. My DAS. I'm disconnected from DAS. I think. I don't know. Anyway, never had that happen before. I just reloaded it too. Control Alt Delete. Oh, maybe I'm on the chessboard? No, I'm not. I closed that out. Huh. It's not that. Internet Explorer might be bugging. It's not even changing it when I click and type over here. I don't know where I'm going. Well, whatever. I guess I can't do that today. But it changes. Oh yeah. Oh yeah. Thanks, Oliver. Yeah, yeah. Anyway, yeah, this one though, right there. That's kind of like this straight from the bottom, straight up to the top kind of move. That I'm never chasing that kind of move because it's just so stuffy, right? That kind of move is so stuffy. The unnatural acceleration straight through a stop loss level like that, I can't long it. People ask me why didn't you long it? I'm like, because of that. Okay. Anyway, Q&A time. Any questions? I hope you guys enjoyed the live video. I think it's going to be released tomorrow. And I'm going to try to be better about, like, I had the crappy ass camera microphone. And it was a short video, luckily, because it happened short, but I use NVIDIA and it's really high definition. So I can't make like super long videos. So I'm trying to experiment with DAS screen recorder, but it's not working. Like, I'm trying to fix it. And then hopefully we'll get more of those. I just have to work out the bugs. I'm too afraid to download OBS because I don't like downloading anything on the internet, which is why I only download from Microsoft and NVIDIA and big names or Adobe. I won't download anything. I don't even download things from SourceForge. I'm too afraid. Anyway, does the inverse stuff exist? I think so. For longs, yeah, when it goes under the death line, just traps under. Definitely, that's definitely what I look for. That's definitely what I look for when I try to get long. But normally I won't try to be there. You know what I'm saying? I won't try to, like, the inverse stuff. I don't think the stocks soar up from the bottom like that as often, because I think if something rebounds off the bottom, like, there's so many people trying to short the pop that maybe it just doesn't seem that we get such harsh rebounds up from like a bottom as we do from the top. Because when it happens at the top, the regular stuff, everybody knows what's coming next. Whereas like when it happens from the bottom, like, it doesn't happen as often. So people, I think, more try to attack the bounce, and it maybe takes a longer consolidation before it finally rips up. As more and more shorts get trapped. So I think that one takes more time than the short stuff. But that's normally what I try to look for when I long stuff, is I want to see kind of like that trap happen before I buy something. But I'm not trying to be there, right? Unless I'm trying to wash it out, right? I'm trying to be the washout long buyer and seller on the quick rebound. That's another reason why, like, those don't just go immediately up, because a whole lot of people bought the dip and they're selling that pop, right? So like I'm not trying to be there on, like I'm not trying to get that bottom tick as I am on the short. What tickers am I looking at for tomorrow? I can't do this. Like I can't type in RHUN. I don't know what's going on. RHUN looks really good. Yeah, I can't even, like, I picked a new chart and everything. Nope. What the fuck? I just reloaded it too. Where is my Thinkorswim? Yeah, I can. Oh, I haven't opened Thinkorswim on this computer in so long. It's probably gonna take forever to update. We'll let that be over there for a little bit. Okay. I use Thinkorswim on my laptop. So like I never turn it on this computer. So it'll probably update for the remainder of the session. Anyway, so definitely RHUN. I'm looking at Fran. I'm looking at Fran, RHUN, SINT as a low hanger for sure. You know, I'm keeping an eye. I think Yuma's dead. I'm keeping an eye on what was it? I'm keeping an eye on TTOO. That's it. TTTO, Fran, SINT, and oh, there it is. Where is it? Nope. Why'd you move over there? Yeah, those four. Fran, TTTO, SINT, and the other one. Yeah, TTTO. I'm waiting for TTTO though. Like, man, I wish I could pull it up on the chart. Let's wait for Thinkorswim to do its thing. Someone else can put it up there if they want. This is the first time it's ever happened to me. Maybe my DAS is wrong or down. RHUN, a little scary because lines every 50 cents. Right. Yeah, I'm definitely not trying to be the hero on RHUN either. Anyway, Rhino says, not sure if this is the place I need to ask, but new trader here, what's your best advice for someone like me? As in just straight up a new trader, dude, just like, how new? How new? Like, the best thing that you can do is just, eat content like it's Thanksgiving dinner. Like, just, like, be the biggest nerd you've ever been. Never made a trade. Yeah, you need to learn all the basics. Like, watch all of Joe's DVDs, watch Matt's. You can watch mine. Mine's more for the people who have already started to trade. But yeah, definitely watch all of Joe's videos for sure. And what you want to do is, once you figured out everything and like you know all the stuff, now it's time to figure out that all of it goes to the wayside when you start trading real money. Everything you thought you just knew is just, it's like you come into trading and everything that you were so prepared for, you realize this isn't the game. It's knowing the information isn't the game. It's knowing how to use the information and not give into, you know, the weaknesses of human emotion. So you learn all of the book stuff, learn everything, and then get ready to throw it out the window and try to learn a new game called trying to do everything I just learned. So that's the first thing. Just digest content. Digest content. Find one pattern that that really speaks to you, and try to only look for that one, and experiment. And like, some of them are going to work, some of them are not going to work, and now it's your job to then decipher out why, right? And that's your first step. Like, try to differentiate of the one setup that you like, or maybe one or two that you like, which ones work and which ones don't, and why. Are you looking at any OTCs? DCGD was a monster run that dumped 65% today. I can't pull it up. So if you could pull it up for me, that would be awesome. I'm typically not a trader of, oh, shit. God, what is it? What? I haven't been able. Yeah, that's it. All right. Now I'll be able to pull it up. I don't normally trade OTCs, but that's just because like they just aren't around. Like I don't care about this account number being shown because there's no money in there. Or we can hide it. I mean, I guess it doesn't matter. There's no money in there. Let's go to 2. I like the 2. And let's make, oh, they're both 3. This is going to be the daily. Okay, so we're going to make that. I need to be comfortable. I need to, okay, that's better. All right. So let's move it over. Let's split us up here. All right, so D, what was it? DC3D? Yeah, what the F, Das? Okay. Wow. Man, how did I miss that? That would have been sick. That would have been sick. What's going on? Oh, I'm only on 1 day, 1 minute. See? I haven't been on here in a long time. This needs to be 10 days. Okay. How come I can't see the previous days? Oh, it's down here. Okay. Yeah, that was great. Am I looking to bounce it? Probably not. If it gets back up to 150, I might consider it. But now I'll be watching. I like OTCs. Gonna buy. Haven't done this. Okay. God, I'm totally sucking at this. What's going on? That's that right there. Okay. I'm gonna buy a setup in the coming weeks. Any recommendations? Talk to Tosh, and he recommended the HP Pavilion all-in-one. Do you want or so it depends. Like, I need my charts to look like this, like that. I need my charts to look square, right? And if you need your charts to look square, like hamburger style, and like not like this, a lot of traders can trade like this, and I can't do it. I literally cannot do this. I cannot trade like that. I need this. And if you need this, then the way you're going to be able to fit more screens is with wide screens. But like I'm jealous of the people who can do it because it's so much more ergonomic to have vertical screens. It's so you can fit more. You can literally fit more, but I can't. So I need the like. I actually don't like my setup that much. The four like horizontal ones. But it's what I have to do because horizontal screens will give you more space because you can fit charts from left to right like this, and you can fit more. So I don't know if you're looking for one big one or a lot of small ones, but I would say that you need wider screens so that you can have your hamburger style charts. Sorry, I just blanked out. What in the F? This is like a that was like a what do they call those, like absent seizures? I just spaced out. I've been up. All right, Rune is the only thing on your watch list. Oh, Rune, that's the other one. Is the only thing on your watch list. Good news is that you have all 3 trades left. And let's pull up Rune. Yeah, Rune is looking pretty. Oh, that was a nice sell off end of the day. So like a pop up to here would be nice, What I would want it to do is kind of parabolic up there though, because then I would feel that would like this would be a very nice first resistance short if it parabolics up here tomorrow. That would be cool. That would be a really, really classic setup, but like it'll probably do something not so nice and like tank and then recover and then consolidate and make you second guess all the time. Yes, HMP. Is there time for a day trader to give up? No. No. Do you have a gaming chair or no? No. I just have a simple office chair. It just like the gaming chair does like I want the office chair because then I can slide under my like I have my desk has like a cubby hole for my feet. The gaming chairs often they're too tall, so I can't. My setup as now I like my charts like this. Not if you love it, Tarzan or Czar. As someone who has studied a lot, do you have any thoughts on overstudying? Yeah, you can do it. You can definitely overstudy, and you just go so hard and like the thing is you think that you're doing a really good thing and you are, but you go overboard. Like most people try to study because what they're trying to do is they're trying to come to the game with all the experience and not lose money. That's why they try to overstudy. They're trying to come to the game like an experienced trader, and they're getting all their experience from studying, and that's just not the way it works. I know, I tried, right? But you can also you can try to you can be too much of a scientist about it, and if you're too much of a scientist about stocks, it's not a science, it's an art, and if by overstudying you're trying to most of the time people are trying to work it to a science and there's no one size fits all answer, and that's kind of what they're looking for, and you're just going to get struck by analysis paralysis. Like it's going to come into the market time to make a decision, and you're going to be like, well, but it hasn't crossed these T's and dotted these I's and filled out these check marks, and you're just going to be super analyzing the situation. The trade's going to go up and go down without you, and where were you, right? What will the name of this webinar be? I don't know. Probably the stuff. I don't know, the stuff. Yeah, the stuff. Yeah. You can. I think you can definitely. You can't overstudy in the long run, but you can overstudy in a period of time. You can overstudy for your expectations. Yeah. There's never too much to learn. Huh. DAS won't work. What the F? Okay. Try it again. Yeah, where is it? I don't know. Whatever. We have Thinkorswim. The stuff they don't want you to know about? Yeah, that doesn't sound marketing. I don't like marketing titles that much. I has how big is your stuff? I has taken a while, but I have never realized the definition of a setup is slightly different. Yeah, so a setup is a setup, but setups don't always look the exact same. There's variations, right? There's always going to be variations to setup, and this is where the art part of the trade comes in. You have to be able to recognize that a setup is a setup, even if it doesn't look exactly verbatim the way it looked last time, right? Yeah, the stuff that they don't want you to know about. Any other questions? Oh, I didn't go back and see if I missed any, so I will do that now. Sup, squad? Please be recording. I gotta double check. The building stronger emotional intelligence. Yep. 100%. Trading below my means lately, been way more. Exactly, dude. Exactly. That's the name of the game. And eventually you'll catch up, right? Like I said, the catch-up period, that catch-up period on trading below your means, it's temporary. You're going to catch up. It's just imagine just backing up 5 steps and walking forward. You're eventually going to get to where you are. And then you can just continue forward. But it's the greed to jump. Can't jump. takes time to size up. I size up very fast, so I have slippery slope, size back down. Yeah, because once you've tasted size, you never want to go back down. And when you ignore not going back down, when when you're an emotional wreck, it's when you just blow up, like big trade after big trade after big trade. Loss, loss, loss. And I think that's it. Yeah, no more questions. Yeah, I mean, we have Thinkorswim. All right, Tay. Got a jet. Thanks for stopping by. Always fun. And it's 9:30. Oh. Any other questions? After slow season and earnings, what's next? The best time of the year. Best time of the year is like October, November, like November, December, January. Best time of the trading year. No interviews, no podcasts. Not really that interested in it. This outlet's good enough. I don't even go on Twitter anymore. This has just become my outlet. Yeah. I post on Twitter every now and then, but like I don't know, it's like Twitter's not what it kind of used to be. It used to be like, there used to be like some good stuff on Twitter, like traders dropping nuggets, and like now it's just kind of like a cesspool. Did you trade TTOO today? Nope, I did not. I took my day and walked. Oh God, that's ugly. I didn't know it looked like that. God, thank God I didn't trade it. Okay, not so bad. Maybe it was just that zoomed in. Make that hamburger stuff. Oh yeah. No, I didn't trade it, but I'm looking forward to it. It's looking really good. Maybe we might get a nice first red. Like I hope it goes one more green day. Like please go one more green day, and then that fourth day would be really good. But like I'm afraid like it's gonna gap up tomorrow, and then it'll be like a gap and crap. I don't normally do very good with the gap and craps because I don't like to just short out of the open. That's just not something I like to do. And so gap and craps, like I don't make money on. I just don't make money on gap and craps. It's not one of my setups. But I have a feeling that's kind of what it looks like it's going to do. It's just going to gap up and then that's what I hope not, but that's what it's looking like. Morning and/or trading routine. Yeah, so my trading routine, it's kind of changed actually lately. Like I've gotten really lazy about it. So I don't know. It's like maybe it's because the market's busier. Maybe because the market's busier, I don't feel the FOMO of having to get the locate on the one stock that's going to be in play that day. But like, okay, so it's only been the last week or so I did this. Normally my routine is I wake up at 7 a.m. market time, and that's when I immediately open DAS and immediately look. Maybe there's something that like I can locate right away if something's already up. If not, I already kind of know what I want to trade based on yesterday, but I keep everything open and I start looking for, normally there's a couple stocks up and I immediately, I pull up filings, I start looking at the float and I start getting an idea. I check on locates for what's up, what I wanted to. And then I do about like 30 minutes to an hour of prep work after going over filings and looking up floats, volumes, looking at proper companies are profitable or not, just on the small cap pegs, trying to formulate plans. Then I normally go and make some kind of breakfast, something really fast, like 15 minutes or something. Oh, I'm not alone, dude. You made me look. Dude, you made me like who the fuck? Like, dude, that was creepy. I was like, I looked in here. And then I'll normally go get something to eat, come back, try to avoid pre-market trading and maybe just lay down, set some alerts, look on my laptop, and wait for market to open. Bullshit with people in chat, and that's it. Lately, what I've been doing is I wake up, I check like Thinkorswim and people who post stuff in watch lists and scanners and chat, and I watch my Thinkorswim scanners too, and I'm looking for anything that's up, and then I'm trying to locate stocks through my phone. And then I have an alarm set for 7 a.m. market time, 7:25 market time, and then I have an alarm for 9 o'clock a.m. market time, and I sleep another hour. But that's because I've been lazy because the market's been so busy. Like it's not super competitive with the one stock. Like, so I've been lazy lately, but I'll probably kick myself back into shape at the next loss I take. Maybe I should do so before the one time I don't plan on a stock and maybe I just get caught. Like, yep, that's why you can't do that. One of my favorite Michael Jackson songs too. Is it normal for a stock such as Fran to be way up and then it's restricted to no borrows? Yes. Oh yes. Oh yes. Like, that is so normal. And it's so normal. One, like Wedbush likes to restrict a lot at Cobra. Wedbush likes to do that, and it's not Cobra's fault, it's Wedbush's fault. Like, Wedbush has this thing where if anybody loses money, like if a whole lot of people lose money on a Wedbush stock, they just restrict it. Like, they just restrict it. They don't want anybody losing any more money on that stock. It also has something to do with clearing too. Like, if the whole float was shorted, it happens with low float stock. If the whole float was shorted, right, and every single share is in settlement, if the shares are in settlement, I don't think they're not supposed to give the shares out, right? Because it's in settlement, and like then it would be kind of naked shorting, right? Like, and so that's also why normally the stocks that go way up are stocks that got short squeezed out, right? Everyone got short squeezed out, and so like it's still within settlement dates, or people are still holding the shares, right? So a lot of the shorts are still stuck, and they still have the shorts, and a lot of the shorts covered it. So it's either in settlement or being held. So the borrow, like, it just gets restricted. There's just nothing there. It gets put on reg show, and then you can't trade it. That's very normal. I'm learning that I have to stay away from all chat rooms, Twitter, scanner while I'm trading. I have the best chance of sticking to my plan that way. Yeah, a lot of people are like that, and like I've certainly turned down my noise too. It's certainly helpful. Because as soon as I see something that I'm going to bring it up on your charts, you're going to chase it, or even like you're going to look at someone else's idea and then let that idea influence your idea. Like, that's also something that can happen. Yeah, but yeah, the whole game is not FOMOing. Like, the whole game is not FOMOing, not getting penis envy, not getting not trying to make up trades. These are the big things, dude. Like, that's all you need. If you can avoid that, like, you're in the game. If you can't avoid that, you're doomed before the game starts, because that is the game. How do you know when the SSR is on? So in DAS, there'll be it'll show like SSR in the top right hand corner of your montage. You can also just do the math on prior close. It's going to be 0.9 times what the prior close is. That's the SSR level. Because when a stock goes 10% down, that puts it on SSR for that day and the next day. All right. Everybody seems to be kind of winding down. Any last questions before we head out? I actually started not in PDT, so I'm sorry I can't answer that question. Sorry. But, I mean, if I had to guess, it would definitely be the trend break pattern. Or the stuff. The stuff was my bread and butter. That stuff was my bread and butter. So that one, or the overextended trend break. and only sticking to those couple. Like that's the way out, is to just, it might take longer, but if you want a consistent way out, just ask Alex, ask 2 times. Just, just slow or steady is faster than trying to get it fast and choppy. You're welcome, Stealth Galaxy. Thank you guys for coming. Thanks, Alex. Good job lately, man. Keep it up. And oh man, like it's so awesome that you're doing that too. Like I wish more people would, but like smaller gains, but fuck, the consistent is just gold. Oh, I miss this color of Thinkorswim. Miss that color so much. All right, guys. Dwindling more. I'll see everybody tomorrow. Thanks for coming to the webinar, guys. Agree. Thank you. Thanks, everybody. Have a good one, Phil. All right. Let's do this. Stop the